Hey guys, this is Rudy coming at you live from Palm Beach in Florida. It is a beautiful day out there, and I hope wherever you are, it's a beautiful day for you too. I hope you're all healthy and keeping fit and staying on top of all the things that are happening around us, including floods and riots and COVID and all that kind of stuff. I hope you're all in good spirits as I find you this morning. What I thought to do is share a little bit about some information about the Occidental warrants. A number of people have asked me questions in the community forum. Plus, I also get emails from time to time saying, "Can you please revisit the warrants?" This particular video is prompted by Jonathan Greenberg, who commented on another video and ended his comment by saying, "I'd love to see a video on Occidental Plus or the other warrants." So I thought, you know what? Why don't we take a few minutes and just kind of revisit the Occidental warrants and kind of walk you through it. Firstly, sort of in my language, each warrant represents the right to purchase one share of Oxy common at $22 per share. At the time they did the distribution, Oxy was trading at $15.45. The term, the original term, was 7 years, and they give you the right to purchase via a call warrant. So they effectively, you can think of it as a long call option. A specific stock, obviously, we know that's Oxy at a specific price, which is $22, before a specific date, which is August the 3rd, 2027. The 7-year term. So you can really view this as a long-term call with a future dated price at $22, which is your strike price. And if you think of that carefully, effectively you have the ability to just hold the warrants until Occidental goes sky high, you know, $50, $60 a share or something like that, and then you can buy it for $22. This is a common or typical derivative. In other words, the value of the or the benefit that you will raise as a taxable gain in the future is derived based on whatever the shares are trading for in that future period when you exercise your right to purchase the common for $22. And of course, warrants are not worth anything when they expire. So if you hold on to them and you don't do anything when you get to August the 3rd, 2027, if you have not done anything at all, they're worth nothing. The more legal language in terms of Oxy's SEC filing, so I had to go back a little bit on this one, but on August the 3rd, Oxy issued 1,114,734,500 warrants. Pay attention to this number, 114,700,000 warrants, so about 115 million. Keep that in mind just until I get to the end, because that number is actually quite significant, and I'm going to show you why when I get to the last slide in this presentation that I put together. To holders of record of Occidental common stock on July the 6th, 2020. If you were long Occidental on July 6th, 2020, you received one warrant. This was an award, so you received one warrant for every 8 shares of Occidental common that you had in your account long at that point in time. The warrants may be exercised at any time in accordance with the terms until August 3rd, 2027, which is 7 years after the date of the original issue. So we're almost close to the first year anniversary, and you have 6 more years to decide whether you want to cash out and sell them and take your profit, or otherwise, based on today's price, or otherwise whether you want to hold on to them and exercise your right to purchase Occidental common in the future for $22 per share. At the bottom here, it says the warrants were issued pursuant to a warrant agreement between Occidental and Equinity Trust Transfer Company. In some countries, transfer agents are called registrars, share registrars. The largest one in the world is a company headquartered in Australia called ComputerShare, and they have clients all over the world, and they have offices all over the world. Equinity is Occidental's transfer agent. In this particular instance, also its agent for warrants. And Equinity Trust Company is actually a UK-based company who had a presence in the United States prior to their acquisition of Wells Fargo's transfer agency business about 2 years ago. And that gave them a huge footprint, because Wells Fargo, as a transfer agent, had many Fortune 500 US clients as part of their transfer agency book of business. And Equinity acquired that book and bought the business from Wells Fargo. I think it was about 2 years ago. I'm not sure. I'd have to have a look, but that's where Equinity came from. And Equinity is Occidental's transfer agent, and in this particular instance, also the warrants agent. Of course, we know the stock is listed on the New York Stock Exchange. It's Oxy. At the issue date, the distribution date of the warrants, Oxy was trading at $15.74 per share. That's only important from the point of view that they were actually issuing warrants that were out of the money. And because they were out of the money, they were issued effectively giving you the right to purchase Occidental at $22 per share. But effectively, why would you? Because at that point in time, you could simply buy Occidental on the market. and during trading hours for $15.74 a share. So effectively, by issuing them out of the money, they automatically took on the sort of typical persona of a long-term call option, because no one was going to exercise the warrants right away unless they wanted to sell them for cash. The warrants have their own QSIP, so it's a CUSIP. A QSIP gives it its own ticker symbol, which is OXY.WS. Some brokerages simply listed it as OXY Plus. And you may see it on your brokerage account as OXY space WS, OXY.WS, OXY Plus, or something of that nature. A limited market, commonly known as the when issued trading market for the warrants, developed on July the 30th, and regular way trading of the warrants will begin on August the 4th, 2020. So I just mentioned that a minute ago. At the time of distribution, OXY was trading at $15.74 per share. So the only regular way trading of the warrants that would begin on August 4th would be people simply saying, I'll just sell these and cash out. And they had no particular intent or reason to keep them. When they were issued, the trading market price was $5.60 per warrant. You may see it in your brokerage account at $4.95 or thereabouts. I think for most people, perhaps even for all of us, it's $4.95, and that's because there's some brokerage fees and transfer agency fees related to that as well. Furthermore, on the SEC filing, OXY said warrants may be exercised on any business day. Of course, as I just said, you can sell them. Now, because OXY is trading at above $22 per share, you can even exercise your right to buy OXY for $22. If I were a holder of warrants, I would simply hold them at this moment in time and see where Occidental goes, because I still have another 6 years. That's a long, long time. Of course, they're only issuing whole shares for the warrants, so we don't want to be managing fractional shares. That'd be really, really tough. And the common stock issuable upon exercise will be issued by Equinity Trust. That's important from the point of view of saying, Mr. OXY, how do I exercise my warrants? Well, you let your brokerage account know that you'd like to exercise your right to buy Occidental shares for $22 per share. The broker will contact Equinity Trust and say, Rudy wants to exercise his right to purchase Occidental for $22 per share. Please issue the stock, and my broker will charge me $22 per share, which is the strike price, regardless of what trading OXY is trading for at that moment in time. If we look at the performance of the warrants, the first graph here is year to date. So this year, so 7 months, the warrants have generated a return on investment so far for the year of 70%, whereas OXY is only at 57%. So the warrants have outperformed the common stock quite handsomely. The warrants being the darker line at the top here and OXY being the orange line below. But you can see they actually have the same trajectory if you look at the chart, the two of them. If we look at it over a 1 year period, in other words, it's almost exactly a year to the day when the warrants were first issued, they were way, way under the sort of performance of the common stock for the longest period of time. And one of the reasons why is simply because the warrants were issued when OXY's price was below $22. So the warrants initially were not that attractive, but as soon as Occidental got into the sort of $20 range, that picture changed a little bit, and people started buying warrants, including Carl Icahn, who bought several million warrants, and still, as far as I know, is holding them today. We'll have to look at his 13F at the end of the quarter and see if he has sold or exercised any warrants, but I think he still holds them today. But you can see for most of the time, with the exception of a couple of little dips and valleys, the warrants outperform the common stock. And over the 1 year period, the warrants are up 65%, and OXY's common stock up only 55%. A new warrant buy example compared to an awarded example. So if you bought the warrants and you bought them for about $10, we know the strike price is $22. Then if you want to exercise them in the future, it's going to cost you $32. So yeah, I'm not talking about selling the warrants. I'm actually talking about exercising your right to purchase OXY at $22. If you purchase the warrants for $10 and OXY, your strike price is $22, your total cost is $32. If OXY at that point in time is trading at $42, just to make a nice round number, an easy example, your cost to purchase was $32, and you end up with a taxable gain of $10 per share. However, at that point in time, you're probably holding them long, and you will only pay taxes once you actually execute a trade and sell the stock for the $10 gain per share. However, if they were awarded to you, you kind of got them for free. Now, I say for free because they have a value of $5, but you were awarded these because you were a stockholder in Occidental Petroleum. So they didn't just give them to you because they like you. They said if you are a holder of record on July the 6th, 2020, we will give you 1 warrant for every 8 Occidental shares that you have. So it's kind of like a dividend if you think of it from a long investor's point of view at that point in time. But you didn't pay the $5 for them. So now if you want to exercise your right to purchase Oxy for $22, your exercise purchase price is $22. If Oxy at that point in time, similar to the previous example, is trading at $42, less your cost to purchase, which is $22, your taxable gain, if you were to sell your Oxy common, would be $20. I'm not saying one is better than the other. I'm just illustrating the difference between the two. If you were to exercise your right to buy Occidental in the future, nothing prevents you from simply selling your warrants, and cashing in whatever profit you're sitting on. The issue price is $5 for you in your brokerage account. If the warrants are trading at $10, you cash them, take 100% profit, and that's the end of that. So earlier on, when I said they issued 114,734,000 shares, that's almost 115 million shares. I said keep that number in mind, and this is the reason why. So here, first I'm looking at the way in which you execute a trade if you want to actually exercise your right to purchase Oxy at 22. So I just talked about that. I won't go into it again. And the warrants can be bought and sold on the secondary market up until expiry. The secondary market, because you actually have to notify your broker that you would like to exercise your right. So you can't just go live in your online account and buy Oxy at $22 when Oxy is trading, for example, at $26. If we look at the balance sheet, and it's just a short, quick little snapshot here, stockholder equity, Oxy has 149 million shares in treasury. And that means that previously, and this goes back a few years because this actually goes back, I think, to 2013, 2014, Occidental's board approved a share buyback, and those shares appear in the balance sheet under the stockholder equity section of the balance sheet, and you can see they hold 149 million shares. The reason why I'm sharing that with you is because by definition, when warrants are exercised, the company issues new shares, which increases the total number of shares outstanding, which is a dilutive effect. What I'm sharing with you here is that Occidental has more than sufficient shares in treasury to actually issue the shares from treasury via Equinity to people who exercise their right to purchase Occidental. So it is correct to say that when the warrants are exercised, it is a dilutive effect on the existing shareholders. But technically, that's not necessarily true because Occidental has a large chunk of Occidental common treasury shares that they are actually holding as of today. So I hope that's beneficial to you. I hope it helps. If you have questions related to things like stock options, employee share purchase or stock purchase programs, restricted share units, share appreciation rights, SARs, SAR, share appreciation rights, or TSARs, tandem share appreciation rights, feel free to ask me. If I can't answer it, I'll look up the answer. I have about a decade of experience in working with that. In addition to that, also things like the 10b5-1 program, which is a disposition program, where Carl Icahn announced ahead of time that he would be selling shares in the future. That's called a disposition. It's usually an executive disposition program under IRS Rule 501 C3. So, sorry, IRS Rule 10b5-1. That's why I stumbled there on my language for a minute. The only thing that I cannot give you advice on is tax. If you have information that you require related to tax, every jurisdiction is different. They all work differently. Some are taxed at the time of award, some are taxed at the time of exercise, some are taxed at the time of disposition in the future. So I'm not going to go there, and there's no way I could possibly know what the tax rules are in jurisdictions where I have no familiarity at all, like Turkey or Russia or whatever. So I'll skip that. I don't answer any questions on tax. But if you have questions related to warrants and options, I would certainly probably be able to accommodate those. Anyway, guys, thanks for watching. This is Mr. Roxy. Otherwise, you can just call me Rudy. Signing off, saying thanks for watching. Have a great day. Stay safe. Bye-bye.